The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Our guest today at the break will be Jeff Huge of Alpha Insights. Tomorrow we'll have Stan Harley. On Wednesday we have J.C. Parrots of All Star Charts. Thursday we have Paulo Douglas Webb. And on Friday, folks, don't miss the show. It's Leonardo da Vinci's birthday, and we're going to have Peter Eliades of Stock Market Cycles. Been around forever. He's going to show us his Dow chart that he's been keeping since, I think, 1950. It's in a big roll like a Torah, but hopefully he'll be able to show us a picture of that. I'm going to show some charts here from Cycles Research out of Vienna, Austria. You'll notice here that the advanced decline line has been deteriorating rapidly. You can see that by the drop in the stock market that we've had. There's some other charts here that I want to share with you. One, I think, is very, very apropos here. This is really an amazing chart here, folks. Let me get this one up here. This shows you what real estate values are in different parts of the world. Now, this one happens to be, we'll get this up here. You'll be able to see it in a second. You can see on the far left up here, this is basically like a garage in Hong Kong. That's 225 square feet. Usually runs right around $1 million, all the way out to Dubai. They've got a brand new subdivision there, and you get a nice house there for 1,400 square feet. Anyway, that's neither here nor there, but it shows you just the values at different parts of the world is just it's really amazing. You can see the New York and some of the other places. It's really good. And we've got a caller on the line today, Mr. Marshall Robinson from the state of Washington. Marshall, how are you today?
Absolutely terrific.
What can I do for you, my friend?
Let's talk about notes and bonds. Have we finished the ABC and going to start on the D today?
I don't think so, Marshall. They're just so doggone weak. It looks like we're going to be going down to, I think, to around the 137. Well, excuse me, not 137. Around 131 in the bonds, and the notes of breaking down too. They just don't have any friends, and it's just getting worse and worse. And frankly, it just doesn't look very good. It just keeps accelerating. And if we've seen these rates started to spike like they have, that doesn't mean we're finishing a 40-year bull market in bonds, and that one's over. That train has left. So I think we're going to go a little bit lower, but we are at pretty significant support down here in that 138 and change level that we hit early this morning. So I think there's a chance we could get a little bit of a bounce here, but gee, it looks terrible.
Okay, great. Thanks, Larry.
I hope that helps. Yeah, that's been a really good one. So let's wait and see how much it'll give us.
It really has. We got a lunch date here pretty soon, don't we?
We'll be ready, buddy. We'll be ready. Don't just get on down. Come on down. It's been a long time. That's for sure.
We're here.
Wait a minute. You're here. You're here now?
Yes.
I didn't know that. Why didn't you tell me you were showing up?
Well, we got in late last night.
Okay, all right. Well, all right. Okay. Anyway, listen. Give me a call after the later today, and we'll set up something. Okay.
Okie dokie. We'll do that.
Okay.
Thanks
welcome to Tucson. Always, Marshall. Okay, we'll be right back, folks. I wanted to cover some of these other charts here that I think that are pretty important. Here is one here that is a sign. Since we're talking about real estate, I want to get this chart up here. Hold on a second here. I think we should be too easy to say. This is a real estate chart. And if you'll notice here, folks, if you like ABCDs, you're seeing a 3 drive to a top pattern. There's drive 1, There's drive 2, and there's drive 3. You've got a beautiful ABCD. The question is, the timing on it. This thing could go off to the moon. It's already gone to the moon. Maybe it's going to go to Mars. I don't know. But that is an ABCD pattern, and we'll see if that means anything on a little bit longer term basis here. So let's remind ourselves of that. Hold on just a second here. And we want to get another one up here that I think is really important. And I have a little bit. Oh, here's a really good one, folks. You talk about news and all that stuff and what it means. Here is a picture of the Economist, and they were talking about the history. Gold was basically done forever. Okay, see, that's where it was. And then you can see where coal went after the Economist said, I got a book up here called The Experts Speak, and I'll tell you, it is really by Christopher Cerf and Victor Kazansky, and let me tell you, it's nothing but page after page of professionals and specialists and whatever saying, what their opinions are and how wrong they may be. I'm on 72 pages of that book myself. Anyway, that's it, folks. Just because someone says something, don't make it so. That's why we trade what we see, not what we think. Most of the time, unfortunately, we do get wrapped up in thinking. And thinking is, I'm going to cover this next one here, folks, because we got to pay really close attention these next couple of days, because we're historically coming into an area that we have not seen in quite a while. In fact, it's been since 1987. We'll get this up here so you can be able to see it here. Okay, this is the market in 1987. We topped on August the 25th. We came down into the solar eclipse of the 23rd, and then we rallied for 9 days up into October 2nd. And that October 2nd was a Venus-Uranus aspect, a sextile. Now we have, on the 5th of this month, we have a Venus conjunct Uranus. That's a 0 degrees. That's even more powerful. And if that's the case, folks, if that happens, you want to get short on the 5th of August, the 5th of May. The problem is, folks, in order for this to work, we've got to be up this next 3 days. That's the key. We've got a chance because we've held the bottom so far. We're testing it again over and over again. But we've got to be up this Monday, Tuesday, Wednesday, into Thursday. Maybe I'm probably going a day early, but that Thursday is going to be really important from a cycle standpoint. So that's what I'm looking at. Now, we're going to have Peter Leides as our guest in on Friday, so that'll give us some more information too. There's no one that can. There's very few people that can compare what Peter has done in his lifetime, folks, with stuff. He's been with the Foundation for the Study of Cycles since Hector was a pup, and he certainly knows this stuff, and he's got the ear of some really, really smart dudes on Wall Street. So Peter, not only that, he's just a stand-up nice guy. And no hesitation of who he is or anything. He's just, you're going to enjoy it. That's all I can tell you. All right, now here's one that I wanted to bring to your attention. Also comes from one of our friends, 877-927-664. We'll be right back, folks. I'll post this chart on breadth, and then we'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the opening call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, we've got this chart up here. You can see the advanced decline line and how bad it is. I mean, it's just been really, but the second one that I put in here shows you the oversold condition that we have here with more than, oh dear, I think we've lost the picture, and that's my fault. Sorry, boys and girls, give me 1 second up here and I will get it right here. All I got to do is find it again. Oh, shut the front door and raise the rent. Here it is right here, market breadth. That's the one I want to see. Got to blow it up just a tiny bit so we can see it a little bit better here. Hold on. And we'll get this up here. We'll be able to see it. What is important here, folks, if you'll look at these little green dots that are here, this is when we've been minus 200, 2,000 closing. In other words, 2,000 stocks closing more. The breadth of the market, 2,000 stocks down more than up. And you can see this number of times that's happened. We've had a pretty good rally. Well, there's also been times where it hasn't been a rally. Now, the key for us today, from the perspective that I'm looking at, I would really like to see the market make a bottom in here today, early tomorrow, and then rally into Thursday. That would set up a situation that would be very similar to what we had on October the 2nd of 1987. At least we would know at that time what we'd be doing. By the way, the ad is up for the full-day trading session I'm going to give on the 17th of May from 9 till 2. That is probably going to be the last one for the year. So hopefully you can come in. It's going to be a good one because we're going to do all the things like we did in London, only we got 5 hours with just between us boys and girls doing this, so it'll be a lot of fun. I'm going to be doing more trading in this one than any of the other 4 that I've done. This will be the 4th one. The other 3, we did 5, 6 trades, but we'll probably do more just to show you the patterns and how they line up and what we're looking for. We'll have time for questions and answers. We'll do a couple of PowerPoints showing the 135 and a few other things. But I've got some new stuff that I think you're going to be really like. In fact, I really like it, so I know you're going to really like it. So it's all about how much money you don't lose, folks, not about how much money you make. Okay, now we've talked about the coal. Now I want to get another one up here. This is what's really interesting here. This is another one from our friends over in Austria. Let's get this up here so we can take a quick look at this one here, because this shows you how important it is. As you'll look at this chart here, you can see how important it is, because this is the number of new lows that have been exceeded by new highs 2 or 3 times or more or in this time. This is such a bearish chart, folks. You probably shouldn't even show it. You can see the advancing and declining ratios, right? Look at the new highs to new lows. And this was on a day when the market was up 100 points on the S&P. I mean, hello. I mean, was telling the overall market has really got some weakness in there. And if you listen to what Mr. Buffett said on his big promotion that they have there in Omaha over the weekend, the Berkshire Hathaway meeting, he said he doesn't even want to think about the fact that how bad it's going to be for some of these folks in Wall Street, is what he said. Something paraphrased to that intent. So you got to be really careful in these times, folks, because things are a little weak here, but that can change in a heartbeat. But today, all we'd like to do is to see the market just close slightly higher, then rally for a couple of days. The problem is, folks, the bond market rallied to the 382 today at 140. We're now down $1,500 from that move. And that only took a matter of 2.5 hours. This shows you how bearish the overall condition is in the bond market. The Fed, for the first time, folks, in a very, very long time, is trapped. They are trapped between a rock and a hard place, and that hard place is going to be banging them around quite a bit, because they're getting the same problems in China that we've had here. We've been living off debt for too long, and now this debt is coming in for a home, and there's no landing space. So let's be really careful in here, folks. These things could really, really get exciting, and they've already been exciting. We just have to keep them more exciting. But my whole goal today is, if we can come in here Thursday making a slightly higher high, then that's when you want to be able to get ready and put on your dancing shoes and to see what's happening. I also wanted to share with you some of the things about how bearish the NASDAQ has been. You already know this, but when you see it in context, you'll see that this has been a pretty negative rundown in the NASDAQ. This graph shows you how bad it is. And not only that, but the fact that we were down during April, which is usually, you buy and sell in May and go away. So it should be cresting in May. And boy, it hasn't been cresting. So I think that's maybe reversing a little bit, but we're bearish, folks. It's going to get bad. So protect yourself as best you can, because we've got some charts here that, if you look at them, the ones that are in the newsletter, the 24/7, the Trade What You See newsletter, you'll see that they've had some really, really negative charts out there that they're not going to change by very much. In fact, Jeff Hughes will be our guest here in about 6 minutes. He's going to show you some of these charts, how negative they really are. And you've got to be really careful, because you don't want to get caught in a downdraft. Think of the people that have been in, things that have had a little bit of a sell-off, Netscape, Facebook, whoever thought those stocks, even the sacred cows, Amazon, Google, only Apple and Microsoft's getting hammered now too. So, you got to be careful in here, folks. You really do, because this thing is possibly made a major top, which I think anybody that's looked at the chart recently would probably say yes. Now, I wanted to cover one other one here, because this is the one that's really got our interest here, because we haven't done anything in cryptos. Our first crypto trade was back in September of last year, when we did our very first trading day live trading day, we said to buy Cardano at 6 cents. It went to $3, and I know for a fact that some of the folks in the room that day did pretty good. But this is where the Bitcoin is now. You can see we've been after that big ABCD up there at 67,000. We broke all the way down. That was nothing more than an ABCD right there. That was that ABCD. Now we had the 382 retracement of that move. Now we've broken down and we've rallied up and we made a 382 retracement here. Once we start getting below 35,000, folks, get ready, because a little bird told me, and that bird is pretty smart, that this is going to be the equivalent of buying gold at $1.50. That's what the analogy was. So we'll see. Anyway, whether that's going to be right or not, I don't know. But let's just look at a couple other of these charts that are out here that may be interesting to you. They're certainly interesting to me. Here is one that has been in the news here for quite a bit, especially today. And we have been short the gold, and we've also been recommending, to be short the silver. And as you can see here, we've broken down badly now, folks. I haven't updated this, but I did see silver just a little while ago down another 40 cents from that 78% level. And with gold down another 25, 30 bucks, not looking good. 877-927-6648. Stay tuned for Jeff Huge, Alpha Insights.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN has just launched their new trading room, the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, we're back, folks. We have Jeff Huge of Alpha Insight as our guest today, and he's going to be talking to us about something he told us about 2 weeks ago, and that's portending, is that the right word? Financial crisis threat. Jeff, I ask you to come back on because you've had this thing nailed to the absolute wall. So you want to tell the folks where we stand right now within the context of what you're looking at?
Absolutely, Larry. First, thanks for having me on the show. It's always a pleasure to be here. With respect to the financial crisis threat that we identified a couple of weeks ago, this model only has 14 years, 15 years of history. It's got a back test to it. We created it really as a, kind of what if we had this information in advance of the great financial crisis, right? Because the model gave a great signal for, liquidating your portfolio in front of a financial crisis back in early 2008, January 2008. And then it turned itself back on in May of 2009 and got you back into the market. And so we've been paying attention to it kind of, really kind of offhandedly, right? We haven't taken it too seriously until all of a sudden we got this, March signal, that, boom, liquidity conditions have really, really tightened. And we're wondering what it could possibly be. And quite frankly, I think it's the rise in interest rates.
Well, it certainly looks like that, and I believe your next chart certainly gives an idea of what's happening. The people that have been involved with the TLT and some of these other things, boy, they have really gotten creamed, and it doesn't look like there's any relief in sight the way it's acting. I mean, it looks like the Fed has lost control. That's my 2 cents worth, but I don't know.
I can't disagree. I mean, based on the current inflation data, and we can talk about that a little later, but it looks like they're about 500 basis points behind the curve at this point, and the 10-year Treasury is only halfway there. The 10-year has rallied to almost 3% exactly this morning. It got to like 298.7. So, our published target was 3% for 2021. We thought it would take about 9 months to get there when we published this back in November of last year originally, and it's taken far less time than that, just 4 or 5 months to hit this target. And, the real question that we've been, struggling with is what's next? What if this thing just keeps going? Where could 10-year bond yields go? And again, we'll give you an idea of where that could be a little bit later.
Wow. This next chart is really interesting because I see that you've looked at the put-call ratio here because you've got a lot of boys out there buying puts and, see the thing that's going on here. This is almost a record, isn't it, put buying?
It is a record. It's an absolute new record. It assuaged the 2002 tech wreck peak. And, the thing that makes me kind of concerned here is options traders are really the smartest people in the market because the successful ones, because they got to be right 3 times. They got to be able to predict volatility change. They got to be right on the time, and they got to be right on the direction in order to truly make money in options. And, when you're buying call puts at the rate that you're buying relative to calls now, we have definitely seen a new level of fear overwhelm options traders. And usually you would consider this as kind of a contrarian indicator. Everybody's on one side of the boat. Let's move to the other side. But sometimes they're right. And sometimes it takes a little while to get to the other side. It might take months. And so we could linger up here for a while. And that suggests to me that, we need to be cautious. And there's a really good reason for that. And it's obvious when you look at the S&P 500 chart.
Yeah, that's for sure. I mean, these they're getting more bearish as they, each day, actually. Let's take a look here now. We're going to bring this up so you folks can take a look at it. This is the S&P chart that I believe Jeff was referring to. So you want to tell us, looks like you've got some targets down here that are not too far away now.
Yeah, exactly. So first of all, we published our monthly newsletter called Huge Insights on the 29th, and we included this chart, among others, in that, really pointing to the fact that a major top formation has been developing here, and it appears that it has resolved to the downside. We've taken out the 20-week moving average. We've taken out the 30-week moving average. The 20 is now crossed below the 30 and are pointing down. We've broken below chart support at 4,300. And we've also broken below the new trend support, which was really putting a trend line across the 2020 lows and the 2022 lows in February, and we took that out 2 weeks ago. And what we saw last week, which I believe to be kind of the prelude to the real selling, what precedes severe weakness? Weakness. And so we saw weakness last week, and I think severe weakness is on the precipice at this point. I think a strong close below 4,100 would confirm it, and that would project down to about 3,600, maybe 3,550 if we're, kind of really being specific.
Yeah. Wow. Well, it doesn't take long once these markets starts moving, boy. It's like they say in Minneapolis, momentum is a 2-touchdown lead. So I don't know. This thing looks very, very ominous to me. Just looking at this chart, it looks like so. And then when you look at your stocks like Google, Amazon, Netflix, Facebook, my goodness, these things they're absolute disaster. And Robinhood, I mean, some of these are just absolute disasters from people, and that's not a good sign in itself either, is it?
Those are the cracks in the dike that I see. And what I'm looking at here when I look at this S&P chart is a classic pattern top formation of the head and shoulders variety. And when you see a pattern like this, you're crazy to ignore it. This is a very serious, has some very serious implications.
Yeah, that's right. This next one is the S&P. And, we're at such a high level here. People, we had the COVID, but everybody, it was over so fast. Everybody got their money. There was a great buying opportunity. But this one looks a little bit more suspect. And the two reasons, I don't want to interrupt with what you're saying, but the fact that interest rates are going higher, boys and girls, and that's not good for stocks on a long-term basis. But that's my 2 cents worth. What are you seeing here in this 2022 composite cycles, Jeff?
Yeah, so, initially we got a little ahead of ourselves. I think put the cart before the horse. The stock market sold off into January, sold off again into February. And then we got a big rally in March, which I think brought us back into sync with this composite cycle. This cycle really takes a look at 3 different elements of cycles: the 1-year seasonal cycle, the 4-year presidential cycle, and the 10-year decennial cycle. And it aggregates them together using historical data going back to 1928. And so what we're seeing is basically how all these cycles worked when they're in harmony together. And what we're looking at right now with the most recent low is we came into a harmonic, which was the Montgomery cycle turn date that was scheduled for Saturday, April 30th. And, it was a major, and majors have to do with lunar eclipses, basically, in Paul McCrae Montgomery's work. And so we need to kind of give this plus or minus 3 days, which suggests that maybe we could go into Fed Day before we actually see what it means. And so we could be weak right into, midday on the 4th. And then when the Fed comes out with their announcement, we could see a rally from that level. And so, we can talk about this when we come back from the break.
Yeah, we certainly want to do that. We'll be right back, folks. Jeff Hughes, Alpha Insights. We'll be right back. 877-927-6648.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, we're back, folks, talking with Jeff Huge of Alpha Insights, and we're talking about a S&P 500 cycle composite. You want to tell the folks what you're looking at here, Jeff?
This week, Larry, like I was saying with this Fed announcement, that could be the catalyst for a rally into the next major turn date, which is May 16th. And then we would look for another top there and a rollover to new lows, which could come into play around May 30th, which is the next minor cycle turn date from Montgomery. And then he has one more this summer that comes into play in around mid-June, June 14th. But the cycle composites doesn't bottom until July. And so we think that it's going to be a steady ebb and flow lower to these July lows, probably around, the 4th of July timeframe.
Wow. The way you put these charts together, it just shows a picture of what's really happening. I mean, that's what's so amazing to me. Let's take a look at this next one right here, which is a inflation dashboard. I mean, it looks like inflation's getting worse than I heard on Bloomberg that inflation in Germany was 30%. I'd never heard a figure that high before.
Well, that's one of the things that concerns me is, it's much, much higher in Europe. And what happens is, the global financial system and supply chains are so interconnected that, inflation can transcend geography. And what we're looking at here is inflation jumping about 300 basis points at the core level in just the last year. Now, these headline numbers of 8.5%, 11.2% that we saw last week for the CPI and PPI, those are high numbers. But what the Fed's really looking at is core inflation. They're looking at, inflation that doesn't include the real volatile energy and food price, commodity prices. And they're trimming a few things out. They use this core PCE as their base number. And that came in Friday at 5.2%, which was like a hair below where it was the month prior. Now, my thinking at this point is that with, this spread of, about 300 basis points between where the Fed's preferred inflation gauge is and where Treasury yields are on the low end of the curve, there's a lot of tightening that needs to happen. And so I think what we're going to find is that the Fed not only raises rates by 50 basis points at the meeting, but that their jaw boning is going to be extremely, hawkish. Policy is going much, much higher. It's going to get much, much tighter. That is the biggest risk to equities because, as inflation rages on and the Fed tightens monetary policy, you're going to have this compression of PE multiples. And we think they're going to get down to somewhere around, say, 14.5 to maybe 15 times. And if you put a 14.5 or 15 multiple on 12-month forward earnings, you get about 3,500 on the S&P 500 right now. And that's in line with our technical target to the downside. And I think that could all come to fruition in the next 2 months.
Wow, 3,500. Well, we're only 600 points away, and we've already dropped at 700 points from the high. So that's certainly in the ballpark of looking at some of these things anyway. Question one of our listeners has just asked, Jeff, and that is when stocks like Facebook and Netflix have such horrible chart patterns where they just keep gapping lower and lower no matter what the news is, do you see any hope for those two stocks? That's the question that the gentleman's asking.
I do not. Those stocks are broken, and it'll take years for them to recover, in my opinion, if not decades.
Okay, wow, decades. Wow, that's a lot of time, decades. Hold on a second.
Keep in mind, Cisco took 2 decades to come back.
I remember that. I happened to be involved with one of the people that was started with Cisco, and I went through that with them, and so it was very exciting. Now, the next one that's interesting here is since we were talking about the Fed and interest rates, your title on this is The Tipping Hand. So what are you? What's your prognosis here, Jeff? You think we're going to be headed for 4 or 5% interest rates very quickly?
So this tipping point that I'm talking about is the breakout above this 40-year downtrend line. We're looking at a 60-year history of 10-year bond yields on a monthly closing basis. And since 1981 or so, we've been in a steady downtrend with many, many touch points, and it has not been violated until now. We are clearly through the rabbit hole on the other side, and I think we're going to rally up to the 2018 peaks of around 3.25. And if we just keep going, the count gets me to about 6%.
Well, boy, the people will be very happy the old-timers, raise your hand, Larry, but we used to have 6% bonds all the time. When I first started trading bonds back in 76, when they came on the board, they were trading at 53 because the coupon was 6 and the bond was trading at 12.5. So it was, that was the easiest money in the world, but unfortunately that dissipated and they went gone. I just can't believe that people actually believed they were going to go to zero. That's the most amazing thing that troubled me during that. And I had some smart people explain to me why it could happen. And I said, no, that doesn't fit into my playbook at all. So it certainly looks a little different now anyway.
The advice I would give your listeners is this. If we do see a 6% handle on the 10-year bond yield, that's when you want to increase your bond weighting to about 50% of your portfolio. That's when a 60-40 or a 50-50 balanced portfolio actually makes sense again.
Wow, that's God, I tell you, I wish I could have you on an hour a day for 5 days a week, but unfortunately, you got so much great information. I'll let you go here, but I want to tell the folks how they can reach you, Jeff, because you've got some really great information, and stuff you've done is it's really, really good stuff. So you want to tell the folks how they can reach you?
Sure. You can go to my website, www.jwhinvestment.com. or you can find me on Twitter at @alpha_insights. And now is a great time to do it because we just published Huge Insights, our free monthly newsletter. And a lot of this information that we talked about today is really detailed in there with great narrative and explanations. And it'll give you, a little bit more color on what we talked about. And you can sign up to get that every single month delivered to you in your email box for free. And, we would love to have you subscribe to this. So you can find it either on the website or on Twitter.
Wow, that's really good. Jeff, we'll have you on again very shortly, maybe 2 weeks from now. But stay safe, my friend, and keep doing this wonderful work that you're doing. It's really exciting to see it come through.
Will do, Larry. Thanks, and you have a great one.
You bet. Jeff Huge, Alpha Insights, folks. You just really got some really good information there. So those charts are available. If you contact him, he'll be able to show you what he's looking at here on some of these things. I wanted to get into another one here that's going wacko to the upside by day, and that is this natural gas. Get this contract up here. You'll see we had the big expansion. We had the little bit of a pullback, came right down to the, you can see here we came within a hair's breadth of the 382 retracement here, and now we're heading back up above here. We're trading above 750 right now. The old high was 810. We could easily see this at 10.5 to 12, maybe even 16, folks. That's how bullish this thing could be if it gets moving. We're going to take a break, folks. 877-927-6648. Billy Ray Valentine, Capricorn.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Okay, folks, we're having such volatile swings in some of these things. I have to show you a couple things that I think you're going to enjoy. This is the chart of the crude oil last, you'll see Sunday night here, we opened exactly at a 382. We dropped well over $2,500 per barrel. We went right back to the 382 and was holding there. In fact, when I came onto the air, I added to the short position, which has been a really great day. But the good part about this, folks, was when that 382 fails, and if it goes more than 30 pips beyond that, it just takes off. And I just want to show you what happened here, because these are some of the trades that we're going to be setting up when we do the live trading day on the 17th. Go to 15-minute charts so that we can see the volatility. But look at this, the volatility that you're seeing here, folks. I mean, these are monster. Look at the ABCD swing. A, B, C, D. That's a $3,000 swing to the downside, folks. And now look what it's done. It's rallied right back up. And what have we done? We made the 50% retracement of the move that we had back here. So these are just some of the things that you want to be watching as you're looking at this volatility. It's getting greater and greater. And my gosh, for a pattern recognition swing trader, you just can't ask for anything better than this. I mean, my goodness. I mean, it's following these patterns just as beautiful as you can possibly do it. And today is really important, folks, for the reasons that I just mentioned, and the fact that we're just over that solar eclipse and a new moon that occurred here on the 29th. So if we can rally, just stay quiet to a little bit higher here for the next 3 days or 4 days into Thursday. We're going to set up one of the best selling opportunities we've had in a long time. So like the old adage says, be careful what you wish for. But that's what my wish is. So we're going to see whether that gets us to that point or not. But those are just a few of the things that we've got set up. Remember, tomorrow we have Stan Harley on the line. Wednesday is J.C. Parrots of All-Star Charts. Thursday is Paula T. Douglas Webb, and she will be on the air. And then Peter Elides, I'm going to get him on the whole hour if I can for Friday. You don't get somebody like Peter, very often because he's a little older than me. He's 2 years older than I am, and I've known him since we were kids. So it's going to be fun just to chat with him about the old days and some of the stuff that we've seen going on in the world here. So I hope that helps. Live every day in an attitude of gratitude, and may God bless.